these highs in here, okay? So my main focus until the market shows me otherwise is going to be up here. So what do we expect? Clearly there can be retracements, but going forward, what I'm expecting is us to open, trade below the opening, trade higher. Open, trade below the opening, trade higher. Okay? Very simple. That's our buy program, and we expect that until we reached the buy side liquidity. All right. Good evening, everyone. Welcome back to yet another daily review right here in the Discord. As you all know, I'm going to be covering CPI specifically after the news release, right? That's when we look to take our trades. And this was a day very worthy of coming back on, which is why I'm doing it. It's one of those very easy to see salad type days. And with that being said, let me go and pop on the replay bar here. Okay. So not much to say here on the daily time frame. If you watched the previous clip, you kind of saw what I was looking at just in a buy program and basically keying off of what I already taught in Liquidity episode 1, 2, and 3 right here in the mentorship tab. Okay, so I'm giving you all the tools that you possibly need. You just need to, it's just up to you if you utilize it properly. So getting straight into it here, starting off on the daily time frame. This is the daily candle we're going to be reviewing, obviously. So prior to every single trading day, you always want to identify, okay, what did we do in the previous 3 daily candles? And that's very important. You always want to refer back to the previous 3 daily candles, very specifically, okay? And if you take a look here, what we did was we dropped down, clearing out these relatively equal daily lows right here. See that? Let me zoom in. And then if you take a look here, we have this small daily inefficiency coupled with liquidity being taken right here. And following that, we wick off and end up on a bullish candle above the highs here. This sets the stage for a continuation of the buy program. So CPI, what are we expecting? Open, trade below the opening, trade higher, gravitating towards all-time highs. Did we need all-time highs to be pierced to make money? Absolutely not. What was our target on the live stream? This buy side liquidity high here, buy side liquidity here, and new week opening gap. Why is new week opening gap a target? Because there's fair value being yielded for larger funds. So very specific things happen at these price points that turn this into a magnet. Alright? So with that being said, alright, so looking at the hourly time frame here, there's one specific very key signature indicating excessive strength to the upside that I want to indicate to you guys here. And right away, I'm going to go ahead and map out this imbalance. But wait a minute, we didn't trade into it. Yes, this is what I'm getting into. Whenever we're exceedingly bullish, particularly on the higher time frames, and we have a run on liquidity, and price fails to get to a lower discount array, that right there is literally just excessive fuel to a fire that's getting ready to pop higher, right? So whenever you see a run on sell stops, we're in a daily buy program, and we failed to get to a discount array such as this one. That's a very key signature that we're going to have strength to the upside. And obviously we're looking for strength because it's CPI in and of itself, right? So it's no surprise that CPI had an explosive move to the upside just in one direction. Now, with that established, let's go ahead and drop down to the 15-minute time frame. Here's when it gets interesting. We had that initial expansion. That's like our first clue. Okay, that first expansion of the day is always like the first clue of price, where price really wants to go. What takes place? We get that initial expansion. We consolidate, generate relatively equal highs just below what? Remember, new week opening gap. So not only do we have fair value, aka a magnet, up here, we have these relative equal highs hovering just below that. Now, we trade down into the initial fair value gap. How did we know it was going to stop here in the upper quadrant and not trade lower? It could have, but this is whenever you utilize that left side of the chart. Let me go back up to the hourly. Let's scroll to the left here. All the way over, yes. This right here is an hourly imbalance that I'm mapping out that we're trading within, and I extended that forward. Since price traded above this, this should act as a balanced price range. So basically, we're using old hourly and 15-minute imbalances to be able to frame something like this. Price should not exceed below that hourly imbalance. Okay? So now that we have that established, okay, we bump into that hourly imbalance low there. Boom. What's this green shaded area? Let's go back up to the daily time frame. Let's do it. The high end of this balanced price range on the daily time frame. So not only are we wicking down, let's go back to the 15. Not only are we wicking down in the high end, it's kind of hard to see, but you see the green shaded area here, wicking up down into the high end of the balanced price range, but we're also tapping the low end of that hourly imbalance, and you see it turn on a dime right there. That's perfect. That's what you look for. This is whenever you utilize the left side of the chart, particularly on the hourly and 15-minute time frames. All right, so those two time frames specifically. Now, let's go ahead and get to that 1 minute time frame, because this is where we framed our trade, real time. So, these highs right here, exactly equal. Almost. Now, before I say anything, what are we looking at right now? What are we looking at? What is it? It's a market maker buy model. We have original consolidation, trades below the original consolidation, creates a smart money reversal, trades above the consolidation in the form of buy side liquidity. Okay, so original consolidation, smart money reversal, right on buy side liquidity above the original consolidation. Beautiful. Now, what takes place? Before I get into the buying setup, let me show you there was actually a small scalp that could have been taken to the downside. What takes place? We come up, run the short-term high right here, initial displacement below the swing low, and then what happens? We retrade back up into this balanced price range. Right there, boom, that's opportunity number one. And what are we targeting? We're targeting that discount, original inefficiency, and the relative equal lows here. Because without these relative equal lows and without that imbalance being priced in that I showed you on the 15-minute time frame, we don't have a longing setup. So we're expecting this to propel to the downside. So opportunity number one right here. As soon as it slams up into the balanced price range here. Now, what if you weren't confident enough in this one? Okay, well guess what? It gave a second opportunity. One more drive down. Wicks back up into this up close candle. It's not a pretty one, but institutional order flow tells us as soon as we wick up into this, this is accumulating more short positions before it propels to the relative equal lows here. So let's map this out. Okay, so opportunity number two right here. Institutional order flow. Boom. Sell there. Get covered right down in the hourly imbalance low and the sell side liquidity low. So, and now we have several opposing arrays being traded to, key ones. We have sell side taken. We have the original imbalance midpoint worked in. Just about. Let me see. Not quite midpoint, but in its vicinity. And we're also trading to that hourly imbalance low. Boom. Hits it to the tick. And then we're also in that daily balance price range. So that's why we see it turn away quickly. Now, what happens? We get that original expansion higher. And then what? We return back into our classic 1 minute fair value gap, but more specifically, looking to the left. Why did price close within here and not wick down a little bit? Because we had this inverse 1 minute fair value gap. So price is universal. Just like we utilize that hourly imbalance to the left side of the chart, we're doing the same thing on the 1 minute time frame. Boom. Trades down. That's opportunity number one. Buy there. Get covered right at the midpoint of new week opening gap and that daily buy side high that I mentioned on the daily time frame. You can go back and look if you would like. Now, it looks like this is the only opportunity. It absolutely was not. There was actually a very, very high probability entry, and it was not this one. This is a high probability setup, but what I'm about to show you is something that I taught and is the easiest setup that you will ever find in price. So let's go ahead and get into it. And this is actually going to be on the 5 minute time frame. Okay? So most of you already remember what I'm about to say here. But here we go. Here's our short-term range that we're dealing with before we take out the highs here. Here's equilibrium. Now, where is the first down close candle in this buy program formed at, near, or above equilibrium? It's right here. What was I teaching you? If we have a draw on liquidity higher and it's not tapped into yet, and we create this down close candle near, above equilibrium, We look to utilize this. This is the easiest, give it on me on a silver platter. Laziest traders are catching this trade. What happens? We displace higher, boom, trades above this swing high, trades back down into this down close candle. What is taking place? This is the final distribution before trading up into these premium targets. So, in case, if you missed that 1 minute time frame entry, there was even better one right here. What happens? We come up, we close above this 5 minute imbalance, trade back down in the value gap here, boom. That's the first stage of distribution, and then trades up, creates that classic down close candle, trades back down into it. Let's map out the opening. And boom, that's where you get long, and guess where your stop loss goes? The very low of this down close candle. Price will not trade below this down close candle, not even giving it any time of day at the low end of it here if we're bullish. Okay? Point blank period, that's it. Simple as that, okay? Every time you see this setup, this doesn't perform all the time, okay? It's more rare than it is common, I would say. But if you have the patience to wait for it, you can make a lot of money utilizing this, okay? I've taught this several times now, and it's definitely the most powerful and informative thing I've taught trading-wise. I will say that. Now, you buy here. Here's the second stage of distribution. Where's your targets? Well, relative go highs, it's a little bit too close, but guess what? We know that all-time high is terminus, but we don't even need that. We're just simply aiming for midpoint of new week opening gap up here. How many handles does that yield? 9, 8, about 12 handles. Okay, and if you, let's say you get overzealous, use the high end. That's a lot more. It's more than enough. All right, so this is going to conclude the review for tonight. I hope you guys got something out of this, and I hope you took notes, because if you didn't, you were wasting your time. And what I just taught here is very, very powerful. If you missed it the first time I taught it, here you go. Here it is. This is the easiest setup you're ever going to find in price. And with that, hope you guys have a great night.